A very warm welcome to one and all present here. I am Dr. Dipti Patil and will be your host for today's session. On behalf of Mr. Chandrakant Sarunkhe, founder and president, Maharashtra Industry Development Association and SME Chamber of India, I would like to welcome you all to the CEO Roundtable on Future of Credit, Unlocking Possibilities with Technology, organized jointly with UB, formerly Cred Avenue. UB is a principal partner of this event and it is India's largest debt platform which enables discovery, investment and fulfillment of credit. UB aims to collaborate with the companies that make an impact on the nation's economy and they have worked with more than 3,000 enterprises across different credit rating to help grow this vision. UB Loans is one such product that has helped them to take the lead at reaching this goal. This fully integrated platform hosts more than 750 lenders and has facilitated more than 10,000 crores of loan. India's largest supply chain platform, which has financed supply chains across 11 sectors and disbursed more than 1600 crores of capital, trade and supply chain finance platform for corporates and lenders. Fixed income securities, platform for industrial, retail investors, loan organizations, platform for banks, NBFCs and fintech and end-to-end securitization. Now, I would like to request Mr. Aniket Deshpande, founding member and Chief Business Officer, UB Loans, to give the token of appreciation to the speakers. Mr. Chandrakant Sarunkhe, founder president, Maharashtra Industry Development Association and SME Chamber of India. Welcome, sir. May I request Mr. Aniket Deshpande to please give the token of appreciation to Dr. Shubhada M. Rao, founder. Welcome, sir. Thank you, everyone. Now, Mr. Chandrakant Sarunkhe, the founder president, Maharashtra Industry Development Association and SME Chamber of India. Thank you, everyone. May I request everyone to have your seats, please. Suggestions to the state and central government, corporates, MNCs, bank, financial institutions, regulatory authorities, and government agencies to provide level playing fields and secure the interest of the industries in ease of doing business. MEDA represents a large number of members from the manufacturing industries, exports, power, agro-based industries, infrastructure, realty, allied industrial sectors, service industry, IT and ICT, cooperative businesses and education sector. MEDA provides support services to the members of industries and explore emerging business opportunities in India and abroad, identifying partners and investments, joint ventures, technology transfer, contract manufacturing, collaboration, distribution, franchising, marketing, promotion and branding. MEDA is also representing the various trade and business organization, association and chambers of the state and coordinates and liaises with Government of Maharashtra, union ministries, regulatory authorities, diplomatic missions, financial institutions, industrial development corporations, foreign organizations and authorities. Now I invite Mr. Chandrakant Sarunkhe to welcome and give an introductory address. Sir, please welcome.
On behalf of Maharashtra Industry Development Association, it's my immense pleasure to welcome you all at this small gathering but important gathering for the CEO Roundtable on the future of credit, unlocking possibilities with the technology. Rather, we do not have a habit to organize small gathering or small function. But nevertheless, because of the discussion, and we would like to have more inputs from you. Instead of large gathering, we have decided to meet a smaller group where we can understand the need of our, and particularly the requirements of the industry. And we want this inputs from you, how we can unlock the possibilities for the providing the valuable services and providing the proper services to industry. As Dr. Dipti has mentioned about the Maharashtra Industry Development Association, which is working for the industry for the last 25 years, and we are advocating for the various policies, its implementation strategies with the government, state and central government. Other, we have put efforts for the transforming the licenses and permissions of Maharashtra. All of you must be in industry, especially Viren Joshi, you must be aware that there were around 78 licenses required from 1996 onwards. So now all of you must be enjoying the free movement in our industry, particularly running your industry. And we have done a lot of efforts for bringing the SME stock exchange, even transforming the definition of MSME Act, then collateral-free loans, and putting a lot of efforts for the credit flow towards industry, especially the medium-sized industry and SME sector. Today's our partner UB. UB is India's largest co-lending marketplace. UB stands for the ubiquities, but UB will be also stand for the transparency, collaboration, and the power of possibility. Currently, UB is playing important role of the providing value addition services in fintech sector, and especially in the co-lending and supply chain finance. While taking various issues of banking sector, financial institutions, or RBI or the Department of Financial Services of Government of India Ministry of Finance, we observe that most of the SME or industries or manufacturing sector are facing a lot of problems. Currently in India, as per the government record, around 9 crore enterprises are running in their businesses in India. And hardly 95 to 98 lakhs companies are enjoying banking services, particularly not all are enjoying the financial services, but banking services. But where are the 8 crore, 10 lakhs companies are doing business? Whether the platform and various regulatory authorities. UB is a principal partner of this event. It is India's largest debt platform which enables the discovery, investment, fulfillment of credit. UB aims to collaborate with the companies that make an impact on the nation's economy. They have worked with more than 3,000 enterprises across the different sector, and also they are helping for a movement as well as growing their companies, growing their businesses, connecting with the other suppliers and connectivity with the concerned industries. Friends, this is a platform where they are reaching to the industry, particularly the industries those are looking for supply chain or different type of financial services. Recently, if you look at the speech given by the RBI governor, and I suggest and request Dr. Shubhda Rao to highlight on that. Having today's discussion, Aniket Deshpande from UB will be giving a highlight where you can understand potentiality of this company, potentiality of this platform, and what is the technological development they have done, particularly benefit of the industry. Viren Joshi ji represents the Sigma company here, and he will also talk to suppliers, but suppliers also not with abundant financial support where they can supply for, they can provide a credit facility. Most importantly, I would like to highlight here today the trades platform. How many entrepreneurs or delegates aware about the trades platform? Are you aware about trades platform? कुणाला माहिती है आपको किसी को पता है ट्रेड्स प्लेटफॉर्म कितने लोगों को पता है how many delegates are using that platform or listed on the platform? See, when Raghuram Rajan was the governor of RBI and I am the member of Monetary Policy Review Committee, Every time, every meeting, every quarter we meet. At that time I requested him, either you change the definition of the NPA or bring some support where industry can survive in the competitive era, particularly to enhance the 90 days to 180 days. Shubhda, you can highlight on that. And because of the Basel norms, because of the international norms, they cannot change. Then what can be done? Then they deputed Executive Director Mr. Padmanabhan to review and to understand and study which platform can be brought. And the TREDS platform started. So TREDS platform where SMEs, particularly the companies, those are facing problem, they can release. So therefore, along with TREDS platform, UB is also platform. So this is also one of the leading and emerging platform where you can take advantage. Because why I am showing more interest, my industries, my members, my entrepreneurs and enterprises will be getting hand-holding from them. On time and on demand, the financial services will be available. So friends, I will not take much time. I am also eager to hear from Dr. Shubdara, even Rudraji, because Rudra Mishra is heading the Tata Teleservices, and they are also providing the technology for securing your interest, particularly industry's interest, and that is the most important thing he is going to highlight. Shagun Jain also, he is from UB, and he is also going to give a very good thought on the supply chain finance in India. So on behalf of Maharashtra Industry Development Association and on behalf of UB, I welcome you all, and I hope that this will be a very interactive, very knowledgeable session. And I request you, while our even industry point of view, if you have any questions related to Maharashtra government, related to Indian government, related to any financial institution or any other regulatory authority, you can approach me. If you have any technological telecommunication, Rudra is here. As an economist, Dr. Shubdara is here. She can give you the, we can say, future of India's growth. She is going to highlight today. Aniketji almost he is going to cover about what is the benefit, what is the advantage of the UB. And of course, Virenji is going to elaborate on the from local to global. So the supply chain management, how they can take advantage, and how SMEs or industries can take proper advantage. With this word, I'm thankful to UB for joining hands with us to expand your reach amongst industries and SME sector and manufacturing industry. With this word, I'm thankful to all of you for participating in this event. Thank you.
Pleasure to be here today. And I'm not going to be talking much on credit. I'm not the credit guy, so I leave that for the experts. And I didn't know about UB, frankly. I was just listening to them, talking to them now heard about it, and have some interest on the financing side because I was making some investments, so I knew a little bit about what's going on. But this is a unique platform, so I'm very interested to learn about it and talk. I'm just trying to cover up what I did this morning with the team here and listening to Dr. Rao in the morning and thinking this is a huge opportunity for us to know more about the economy. I think each one of us wants to know what's going to happen in the next 6 months, 1 year, 2 years, having faced maybe when I look at it last 10, 12 years, you look at it from the financial meltdown, and I can jump several notches, just go straight to COVID, go straight to Ukraine, and there's more to come yet, and I don't know what all is going to come. But my first message to all of you is, if you go back to remembering, I think it was 10 or 15 years ago, the American Army talked about VUCA. You're going to still remain in a VUCA world, and it's going to be pretty brutal. It won't be an easy world to be in. So you have to be prepared for it in every possible way. That's going to be really what I'm going to try and talk about today, which will help you lead up to manage your business and then see what you need from a credit point of view and a financing point of view. But my number one message is be prepared for a terribly brutal future. And it doesn't have to be bad. I just say it's brutal because if you know how to manage it, like you do in surfing or you do in a storm, you can survive and grow in that. So that's the first thing that I would say to you. Second thing maybe I'm going to ask you a question. We did a survey in Sigma about 2 or 3 years ago. We did it pretty extensively. Then I was part of one of my largest customers' study group, and we went to meet them and they presented to us. So these are 2 different studies. And the topic was where in the world would we put up new manufacturing. This was for Sigma also, and for this very large US corporation, our customer. And they presented it to us at one time, and separately, 1.5 years later, we did an internal study. Could you guess which was the country that was adjudged the best country to put up your investment from a manufacturing point of view, from a global business perspective, not just for the country itself? Thoughts? Anybody? The obvious answer most people would think of is China, and this was about 2 years ago and 4 years ago, roughly. I'm just kidding. The answer at that time was India, was one of the topmost. And when you look at it, why? Even 2 years ago, people were getting uneasy with China. I have plants in Mexico, and when I walk down the street in Mexico, I've had people pull me off the street and say, "What the heavens are you doing walking on the street here?" And I said, "I'm going from one factory to another, just around the corner." I said, "No, you can't go. You need to go in a car. It's dangerous." It's very difficult to go for a walk down the street, and I'm right across the border in Vares, but still people don't like us walking on the streets till they believe it's dangerous. I enjoy it. It's a lovely place, but Mexicans are lovely people, lovely country, but not a place you could put up too much of a fresh investment unless you're really shipping across the border into US. Otherwise, you wouldn't go to Mexico. So, I can go on and explain each country to you. I can talk a lot about China, but in many senses, not all, India is, and I'm not saying that because we're in India or we're Indians, I'm just telling you the results of a study that tell us that India is a great place to be from a global manufacturing and supply chain point of view. I just want to make that point. And the senior-most people across the world, and I remember I was in Washington speaking at a conference like this, several hundred CEOs, American CEOs, and I spoke, and then chairman of Niti Aayog, Arvind Panagria, he spoke. And he actually contradicted. He said, I heard Viren, and I'm a little surprised that he said it's easy to get land in India and put up a plant. So he caught me after the session and said, "I don't believe you." I said, "Come, I'll show you how easy it is to get land in India in an economic zone, in an industrial park, and it's the easiest thing is it's seamless, it's flawless, there's no concern at all." People miss this point. So the senior-most people, ex-economists, ex-people, miss the point that at times, if you know how to go about it, things are pretty easy. As Chandrakantji rightly said, the olden day industry, all the Inspector Raj and all the things have gone down. I'm not saying they've gone away; they're still there. But if you know, frankly, the way I look at it, if you're highly compliant and you're a good citizen, I believe it's very easy to manage, to make sure you get things done in a very positive and honest way. Go to MIDC, go to anybody, I think it's very easy to get things done. And with nothing that you have to pay. We just put our hands up and say, we can't, we don't know how to do it, we just go do it straight for you. So I believe India is much better and easier to work in today than in the past. And like any country in the world, we've got plenty of problems. So I would say India is a place where you can develop fast. And supply chain point of view is an excellent place to be in. Now, I read a lot about it, I talk to a lot of people, and I understand that there is an issue with respect to business, with respect to collections, with respect to credit and business growth, and I understand that. At the same time, I say, why can you not burst out of that? The way I look at it, the businesses that we've been in and what I'm looking at even today, we're putting in several thousand crores into new businesses in another entity altogether, not in Sigma. But we're expanding in Sigma, we're putting up new entities, we're acquiring new entities, and each one of them are export-oriented. And I've always looked at business being using the local base, but then the whole world is open to you. And the minute you open up the world to your business, whatever business you're in, preferably manufacturing services might have some limitations, not all, but there's a huge opportunity there. The number one thing is your market is bigger, your profitability is at least 30 to 70% better. Your margins are far, far superior. Your payments are, I would rate it nearly 100% better. I've dealt with the biggest company in India for many, many years. They were my largest customer, and my payments were horrendous. They were really bad. That was the way they operated. They operate that way today also. Lovely company, great guys to do business with, but I wouldn't want to do found it difficult to collect payments. And I was right in New Bombay, their office was right in front of me. I could just walk up to their office and talk to the senior people. But payments was payments. Abroad, never an issue. I mean, if my payments are late by even a few days, it's quite likely that the customer would call up and apologize. And say, hey, sorry, mistake. Maybe it's our mistake, maybe their mistake. They'll apologize for it, but you get your payments mostly on time. So I can go on and on. I'm not trying to make a case for just being into exports, but I would say to all of you, look at it from a global ecosystem where you have global mindset in terms of your practices, be it your manufacturing practices, your services practices, your compliances. I just believe, I like to speak well and light in terms of believing it. Personally and company-wide, we have no non-compliance. We don't have to make any adjustments to anybody, income tax, sales tax, GST, name it, and we said, let's clear it up and be clean. And the minute you do that, it's very difficult for anybody to pinpoint. And I can go and I can talk to you for hours on this. I'll just give you one 10-second one. Pollution control is fairly strict today all across. And this was COVID time. And the inspectors were moving around in Chakan area. They came to our neighboring factory, which is a multinational, and they came to our factory. And they caught us for non-compliance. But what was a non-compliance? In a pond of water, there was the measuring line for where the water line should be managed positively in the Indian ecosystem is very possible. And though I can go, as I said, we talk a lot, but I've talked to, as Chandrakant knows, everybody talks a lot to senior people in the government, at the state level, central level, in different levels. There are people who are really positive and willing to help all of us in different ways. I'm sure all of you, as Chandrakant said, if you need anything at all, SME Chamber and his team are really good at helping out and being very supportive of that. We need to know how to use them and talk to them, but really available to help us out. So with that, my bottom line message to all of you is growth is possible. This is an opportunity of a lifetime. I don't have to tell you, you're all well read and you know that China is not a good name. Just to give you a 10-second story again, at the peak of COVID, I was staying in the US, and in the complex that I was, 35% or 40%, 35% odd were Chinese. About 2 months down, just with COVID going on, and just 2 months later, so I'm saying around May, June, maybe end June, just before my wife came back to the US, it was down to 5%. 30% plus of the Chinese had left our complex. Many of them had gone back home. They were not welcome. That was the atmosphere in America at that time. And America, as you know, is quite tolerant to people over there. Fine, they've got their own version of racism, but normally quite tolerant to foreigners. Chinese, most times, were welcome because of their knowledge, their finance, their strength. So here there was a huge negativity. And India has remained consistent. I'm just using the US.
Financial rate or interest rate to equal to international market. Thank you for reminding me, and now I'm going to take up that issue because it is affecting to our industry. हमें क्या करना पड़ता है? What our industry is doing? Working for entrepreneurs, particularly for paying interest, labor cost, overheads, taxation. So बिना पगार के हम सरकार के नौकर है, but nevertheless हम हमारी इंडस्ट्री बढ़ाने की कोशिश करते हैं. Rather, let us have one or two questions from the audience. Before that, I will become an opening batsman. I will ask one question. What is your observation about a particular recession happening in the US and Europe? How it will impact on Indian economy or Indian businesses? I'm asking this question in front of stalwart economist. Please answer it.
So Europe will go through a recession. I leave it to Dr. Babu to do a better job than me, but
we want to understand from you as a business point of view.
Europe will go through a recession, a very bad recession. It will take several years for it to come back to normal. And I won't get into what Dr. Rao and myself were talking about. We went on to into the future and future forecasters of what they think of the world, but there is a definite trend towards Europe going into recession. US will go into a mild recession. It will soften up a bit, partly because of what's happening in Ukraine, what's happening on the fuel side of it. But US, former company Parker, we did an outstanding job of training our vendors in lean, in TPM, in cost competitiveness. We're trying to do that in Sigma also and in the US also. So I think that's one more thing that we should all become part of the ecosystem of our customer to form a strong base that helps us.
The points you have touched upon is regarding that payment issue. See, one of the issues that you also raised through the chambers was that even the big corporates are faltering on the last 10% payment milestone. And they are taking the advantage, especially in the infrastructure and capex market. They are capitalizing their facility and not paying the vendors. So you need to, as Mr. Salonki, you need to take it up with the government to not disallow the capex or capitalization till such time the vendors' payments are mitigated and met with. I think that is one challenge that we need to address as an industry body, because otherwise the whole fund flow cycle is getting stretched to a point. And especially, I can name the company, but this is not the right thing to do over here. The large corporates are the biggest defaulters. And this I am saying, being the ex-chairman of Pune CIA. So this is a genuine thing which the SMEs are facing, even MSMEs are facing, and even large corporates are facing.
Those companies are having turnover about 100 crores. They must list on the trades platform, or they must pay their receivables to their suppliers in 30 to 45 days. As per the government norms, up to 45 days. But nevertheless, sometimes some suppliers or the buyers, they have some typical terms and conditions. So that once they accept it, then we can't help them out.
No, but what is happening is, if you look at the large corporations, large corporates, they are also having their own financing arm. And then they go for a bill discounting, and the interest for the delayed payment is charged on the vendor, which is absolutely a wrong thing in the longer run. I can name the company. It is one of the largest infrastructure company in India. So they have got a financing arm, and so they insist on a bill discounting. If the order says 30 days is the payment cycle, then after 30 days the interest should be borne by the parent or the customer. Why the vendor should pay for the interest for the delayed payment?
Yes, that's why UB is trying now.
Yeah,
we will hear from Mr. Deshmukh.
I may be a little more forthright, but
that's
I
why
think
we are
this is
here
a
today.
concern, yes.
सर अभी जो बोले उसको एक्सटेंड करके मैं बोलता हूँ रिगार्डिंग जो बीजी का है बैंक गारंटीज जो प्रोवाइड करते हैं हम लोग इंस्टेड ऑफ पीपीजी परफॉर्मेंस बैंक गारंटी एज पर द आरबीआई नॉर्म्स अगर मेरा जो टर्म्स है 12 मंथ आफ्टर कंप्लीशन ऑफ द एनी सर्विसेज या प्रोजेक्ट सो आरबीआई का जो है क्लेम पीरियड फॉर एक्सटेंडेड 1 more year मेरा जो टर्म्स है इन बिटवीन द क्लाइंट एंड देयर इज ओनली 12 month but because of RBI this claim extended claim so our BGs and our the margin money से started for additional 1 year so उसके ऊपर कुछ काम किया तो काफी इफेक्टिव हो जाएगा सो हमारा फंड्स यूटिलाइज हो जाएगा मार्जिन मनी से जाएगा या बीजीस जो है मेरे को फिर से बढ़ा के लेने का जरूरत थोड़ा सा कम पड़ेगा
इस पर मैं डॉक्टर राव को कहूँगा कि कुछ कहे You are ex-banker.
I want to say anything without starting the issue.
So there's this issue of claim period, जो 12 महीने का claim period है. It came because of one court case, in which one of the vendors had claimed from a large corporate. अभी क्या हुआ था कि there was a dispute which arose from both the parties, and it went all the way to the Supreme Court for this. In between, what had happened was Supreme Court had given a judgment that the claim period should be it is outside the Indian Contracts Act, the bank guarantee which is issued, and the claim period should be up to a period of 12 months. Now, what has happened in this case is, if the bank is putting a claim period of 12 months, जो आपका original claim period होता था ना, original for any public sector enterprises, it used to be up to 30 years. The law of limitation used to apply there. But अभी 12 महीने का डालने के बाद the law of limitation doesn't apply, only 12 months of claim period applies. Now for this also, Larsen and Toubro had a problem. Okay, Larsen and Toubro went to the Supreme Court all the way to get this squashed. Okay, the Supreme Court has given an order in favor of Larsen and Toubro saying that based on the contractual terms between both the parties, only based on those contractual terms, the claim period will be there. Okay. Now many banks have come back to the original position that if they will charge you claim period, they will set a claim period of 1 month, 2 months, or 3 months based on the contractual terms. There are still certain banks who have not accepted this direction. It's not the Supreme Court, I think it's the Bombay High Court. Bombay High Court direction they have not accepted, saying that it is sub judice and because somebody or the other will go and appeal to the Supreme Court. Now, the stance of the matter currently is 90% of the banks in India have accepted what Larsen and Toubro's contention is that I will not accept a claim period of 12 months. They will only accept a claim period of 3 months or 2 months or 1 month, whatever be the contractual terms. There are certain banks who are still saying that till we get clarity from Supreme Court, because earlier Supreme Court had given a direction in an IndusInd Bank case that claim period should be there for 12 months. Okay. So this is where it is. So there are some people who might file an appeal, especially where the bank guarantees are being given to the government departments, etc. They might file an appeal to the Supreme Court saying that we need a 12-month claim period. Now where it is standing is if the beneficiary, which is the government department, wants a 12-month claim period, then there is no option. But now it depends on the contractor who is giving a bank guarantee, how he negotiates with them. Larsen and Toubro being a large name, he is able to manage to get a 1 month, 2 month, 3 month claim period. But for the smaller people, they are not able to get that. So that is where the matter stands right now.
आरबीआई का कोई भी नॉर्म से अमेंडमेंट्स में नहीं हुआ, ये कोर्ट के है,
ये कोर्ट का आरबीआई का कोई गाइडेंस नहीं है इसके ऊपर,
बस बैंकर्स जो ऑलवेज
इंडियन बैंकिंग एसोसिएशन का एक सर्कुलर आया था टू द मैनेजिंग डायरेक्टर्स ऑफ ऑल बैंक्स दैट earlier the claim period should be 12 months, but after that IBA has not given any circular, but because L&T won a case, now all banks have started suo moto by themselves. They have started reducing the claim period to 1 month or 3 months, whatever the case may be. But you will have to now fight with your banker now, because he is doing it for companies like Larsen and Toubro, then he can do it for you also.
Last question.
Yeah, why not?
So you need to connect with them.
Good morning. I'm Mr. Bukabul from SK Chemicals, running industry in India since 1990, and we have also grown and seen the changes what the lady has talked about, multiple clearances required. Now the things are streamlined, a lot of things are happening online, and it's a big relief for the industry, no question about it. I also tend to agree that the opportunities for the Indian industry are immense right now, because there is a mistrust about China, particularly because the Americans and the Europeans wanted the rivers to be clean, atmosphere to be absolutely particle-free, etc., etc. The Rhine must flow and the Mississippi and all that. So a lot of industry actually went to China, and the Chinese offered three things: cheap labor, virtually zero interest rate, and abundant capital, and cheap power, which were the three things. Now I think most of that is coming round the circle and coming to an end, because labor costs are going up in China is what we hear. Lots of bad debts, some people estimate it to be between 25 to 30% at a conservative estimate, and no protection of IPR as far as the Chinese. So a lot of German companies, etc., are coming to India, particularly in the chemical field, which is where I belong to. And we believe that India is in a sweet spot, because most of the industry has relocated from North America and Europe to Asia, whether Vietnam, Indonesia, China, India, etc. And now there is a vacuum, because with due respect to services, what we have been talking about.
What's your question?
My question is that capital is what we have been talking about. As a SME, what we face a problem is, Larsen & Toubro being it's a capital intensive or the capital expenditure kind of industry. We are raw material suppliers to lots of refineries and a lot of metal companies of the steel industry. We have to keep supplying the goods month after month, and our money gets stuck for between 15 to 16 months because of the rules and regulations that we just talked about. And that money would be anywhere between 10 to 15%. So at the end of the year, maybe sometime in the June, July time frame, we get a lump sum payment for the material that we have supplied 15 months earlier. Now this must stop, and we did not know under what law or regulation do all the refineries and big companies do this, but they are deducting 10% from our bills all the time and keeping the money aside. They do pay us, but once the track record is established, it's like we have been supplying to them for 5, 6, 7 years now. But even then, they still tend to deduct 10% from our bills, even today. And I did not know as to what forum I have to appeal, because I don't know if it's a banking problem, whether it's a refinery problem, or whether it's a company-related issue or whatever. But a lot of money gets stuck.
Write to us with the proper information.
Yes, we will.
Definitely take a look.
Okay, thank you.
Thank you, sir. Now may I call upon our next speaker, Dr. Shubhada M. Rao, founder, Quant Eco Research and former Senior Group President and Chief Economist, Yes Bank Limited. And her topic is India towards sustainable growth amidst uncertainty and volatility.
Good morning, good afternoon, everyone. Mr. Viren Joshi spoke and started with VUCA, and I think though that was a part of my title as well, that to put it mildly, this is the phase post-global financial crisis of 2008-9. This is the severe-most phase that the globe is going through, the pain. So VUCA is volatility, uncertainty, complexity and ambiguity, and never has that acronym fit so well to the current scenario in the world than it has ever before, and this is no understatement. The problem all starts with US having printed so much money around the COVID times, and I'm talking only of the near-term problems. 2020s have started on a wrong note. Normally we talk of black swan, but this appears to be a flock of black swans. You've had COVID waves 1, 2 and 3 of different variants hitting different parts of the globe. And then, quick on the heels of COVID, we've had the great Russian invasion into Ukraine, adding to not just the then prevailing supply bottlenecks, which arose because of China having frozen its economic activity for the first half of 2020. So that there were huge and humongous supply disruptions. We all know China is a factory to the world, and that is where the problem started. Added complexity came when the war started, and Russia and Ukraine lead to a lot of food grain trade, and as a result of which, the inflation problem, which had begun in the COVID times, actually exacerbated, it increased and accelerated post the Russia-Ukraine war. So basically, bottom line is, what did we see globally was humongous levels of inflation, coming to print, a headline print of multi-decade high, 30-year high, 40-year high. US is used to limited inflation rate of about 1 to 2% max. What happened after COVID and soon after the war is the last print, the few months ago print, hit 9.1%, an all-time high, and mind you, United States has never been used to this kind of inflation ever. So what it prompted was, since June and July and August, we've seen unprecedented levels of inflation, starting with US, in England, that is in UK, in Eurozone, prompting the central banks, like a reserve bank, you have a Federal Reserve in the US, you have Bank of England in UK, and you have European Central Bank, ECB, for the Eurozone, all started getting used to jumbo rate hikes. We were used to 15, 20, 25 basis point rate hikes, but what happened, US in the recent most federal policy meeting, which was on 21st, the announcement came on 21st night, India time, the third time on the trot, Federal Reserve increased the Fed funds policy rate by 75 basis points. It started 2022 with 25 basis points in March, 50 basis points in May, and then in June, July, and in September, we've had 75, 75, 75. So we've already seen a 3 percentage points increase in US in terms of the cost of borrowing. Having seen that in US, quick on heels have been rest of the central banks, particularly of advanced economies led by ECB. ECB was late in joining the rate hike cycle, but it has effected large rate hikes. Bank of England was the first one to start raising rates. It has continued to raise rates as recent as yesterday or yesterday. It raised rates by 50 basis points. The short point I'm trying to make is the difficulties and the problems which started with COVID have actually accelerated and become more intense and complex for the world. Why do I say complex? Because US, Eurozone, BOE, Bank of England are raising rates. You have Japan, which is grappling with low growth. They do not, and they don't have an inflation problem as such, which is currently manageable. They are not raising rates. And then you have an economy like China, which is going through severe growth shocks. Not in recession, but any growth rate in China below 4% is equivalent to a recession kind of a scenario. China is actually beginning to cut rates to support growth. So we have, India becomes an economy which is looking at inflation also onshore. India saw a peak of inflation close to 8% in June, 7.79% to be precise. Of course, we have been significantly seeing sequential inflation come off. For India, the fortunate part is our mandate is not 2%. We are somewhere close to 4%, but India being an emerging economy, still a developing economy, the Reserve Bank of India has a band. The band is 2% to 6%. RBI would want to work towards a 4% inflation target, but if there are global headwinds, domestic pressures, RBI is allowed to tolerate inflation up to 6%. What has happened because of COVID, because of commodity prices, they were peaking in June. All commodity prices had peaked in June, and we are a net importing economy as far as commodities are concerned. India saw inflation grow at 7.8%, and for the last 8 consecutive months, India's inflation has been above 6%. 6% is the upper threshold of the tolerance band of RBI. And that is why, while elsewhere the rates have been increased, India also has to respond. When inflation goes up, the central bank has to raise rates, obviously, to calm the demand down. Admittedly, this inflation was more supply shock driven, but supply is inherently low to adjust to response, or slow, not low, slow to adjust to response. अगर हमको चाइना से चिप्स सेमीकंडक्टर फैसिलिटी कहीं और लगानी है तो what happens? It takes time for other countries to set up those facilities. We recently heard of Vedanta joining hands with Foxconn to set up a 19 billion facility in Gujarat. Obviously, it's going to take time. The bottom line is the supply side is inherently slow, because by the time you come to a stage of running the plant, having production cycle started, it takes a few years. Till that time, the central bank has no choice but to calm the demand. That is, if inflation goes up unwielding, what happens is the poor and the lower segment of population has a tax. You and I can afford maybe buying 100 rupee kilo vegetables, but what happens to a large part of India's population which does not have social security-led income like the way US has? They pay a tax through inflation, and that is why for any emerging economy, developing economy, particularly, it is very important to manage inflation at a respectable level so that you're not imposing inequitable tax to the poor. And that is the reason why we are so gripped with the current problem of world's issues coming on shore. Now, I'm sure all of you have exposure to either imports or exports or both, right? All of you probably would be interested in knowing where is the currency. right? Can you tell me what happened to the currency levels post the Federal Reserve announced the third 75 basis point hike on 21st night? आप लोगों को पता है where did the rupee touch or where did the dollar touch? This last evening, rupee breached 81. Rupee breached 81. Now, it is all interconnected. Inflation, interest rates, exchange rates. Why is it so? Because अगर हम inflation बढ़ाए नहीं, demand कम नहीं करें, तो our exports will be less competitive. We have to then manage our exchange rates also. Exchange rates are the outcome of two factors. I'm sorry if I'm taking an economics class, but I need to explain it to you. What happens is, one is pure demand supply of dollars, correct? कि अगर इंडिया में supply of dollars is comfortable and demand for dollars comes from importers and also for the external debt repayment. हमने जो borrowings की हैं, either through government or through external commercial borrowings of the private sector, that debt repayment needs dollars, right? So demand for dollars comes from imports and debt repayment. Where does the supply of dollars come from? Supply of dollars comes from, on the capital account, comes from foreign direct investment. You have portfolio flows, which is known as hot money, that is FII flows, we know that. FII flows, foreign direct investment, external commercial borrowings, we bring dollar to the country. You have non-resident Indian deposits, NRI deposits, yeah? All these become source of dollar supply into the country. Dollar outflow is trade deficit. We are net importing economy, so we are importing much more than the supply of services on current account. Infosys, Wipros, all business services, we export our services and we get dollars. So on current account you have trade deficit, that is merchandise, and you have services trade where we are net exporters. So you adjust both, you are still in a deficit because हमको oil payment कितनी करनी पड़ती थी. June में oil had touched 120, 130, 140, and we depend on our energy needs largely on oil imports. So the peak of commodities led to large trade deficit. When there is a large trade deficit, RBI has to intervene somewhere because rupee will start reacting to the gap of demand supply. So this is one aspect, which is a demand supply of dollar onshore. The second aspect where rupee exchange rate gets affected is the pure strength of dollar, which is called DXY. I'm sure you may have heard of DXY. Dollar is the biggest reserve currency. All the countries have their hold. Most of the 90% of the countries hold reserves in foreign US dollar, right? Our trade and every denominated quote is mainly through dollars. हम बोलते हैं इतना डॉलर का है import, right? We don't say इतना GBP का है और इतना येन का है. Largely it is dollar denominated trade, correct? So it is very important to track the dollar's intrinsic value. The dollar's intrinsic value comes through a weighted average of 5 or 6 currencies, which is Euro, GBP, that is British pound, you have yen, you have Swiss franc, and you have Swedish krona. Weighted होता है सबसे ज़्यादा obviously Eurozone का Euro का weight है, Euro currency का. DXY, because US economy is still stronger, US is not in recession yet, mind you. US is engineering a recession or a slow growth because inflation is unbearably high. So Federal Reserve said yesterday, day before, that we do not have a problem if growth comes to 0.2. That is the forecast for 2022. But inflation cannot be at 9% or 8% or 7%. And they are going to engineer deliberately इतना demand को नीचे घटाएंगे कि inflation कम हो जाएगा, and that is the reason growth is being engineered to come down to a very, very low level. What happens is you have Eurozone, which has energy requirements elsewhere. Russia से ज़्यादा, most of the energy used to be provided, the natural gas was through Nord Streams, was being provided to Eurozone. Russia, after the NATO versus Russia and all the skirmishes that we all know of since February of 24, has, actually discontinued the supply of energy to Eurozone. Eurozone therefore is straight heading towards a recession, because अगर energy नहीं है तो कैसे काम होगा, manufacturing कैसे होगा, and so on and so forth. When I'm trying to relate all of this complexities, VUCA, to all of us here, I'm going to skip a lot of slides. The presentation will be given to you. Any problems, any difficulty in understanding any slides, please reach out, okay? I want to just, give a lecture or impromptu explanation as to why we are where we are, okay? So the problem started with fiscal stimulus, excessive fiscal stimulus. US Treasury government, that is Ministry of Finance, started giving बहुत ज़्यादा पैसा to the country to spur demand in the wake of COVID. What happened was they did not realize that when the conditions become normal, when vaccinations did a great progress, economies opened up, the demand flared up. As a result of which, all that money that had been printed, trillions of dollars have been printed, US printed in 2 years the equivalent. So इतना ज़्यादा पैसा इतने जल्दी आके and demand suddenly moving up. अगर मेरे जेब में बहुत पैसा है तो obviously तुम 100 रुपए किलो बोलो या 200 रुपए किलो बोलो, I'm going to buy it, right? That's how it pushes inflation. So too much money was there, demand started to pick up very dramatically, resulted in this unwieldy inflation in the US and also in Eurozone and England. Okay, because most of the central banks started printing money to support demand, which had got very badly impacted because of COVID, correct? So it was a crossfire of supply shock, because COVID had led to a lot of manufacturing freezing. Mr. Joshi also spoke of the Great Resignation, right? That is a phenomenon. Why people started quitting jobs. And I think that phenomenon we are also looking at in India. A classic example in India, what we see is, I hear a whole lot of people saying, यार अभी manufacturing normalized हो रहा है लेकिन labor नहीं मिल रहा है. Okay, we talk in one breath कि labor नहीं मिल रहा है, and दूसरी तरफ we say unemployment is rising in India. The two should not go together, correct? अगर labor की demand है तो unemployment has to go down, but it is not going down. There is a mismatch, supply mismatch, because a lot of mid to high end, I wouldn't call them labor, but workforce has decided to take it easy. They want a better work-life balance because of the trauma and pressures, mental, emotional pressures they've gone through COVID. They want to opt out of the race of employment, take a time off, or change the profession altogether, like it is happening in US, UK and all the developed economies. Incidentally, there was a survey done that 42% of the people who resigned from their jobs in US are repenting, are having second thoughts. Why did they resign? Because the work conditions that they anticipated in a new job are not materializing. Slightly better pay, better work-life balance, all of that is not materializing. So there is a fair sizable number of population who's got in a confused state of scenario that should they get back to mainstream, or should they still, till they have the deep pockets to spend and survive, and stand by the side and wait for economic conditions to get better. The bad news is economic conditions world over are not getting better anytime soon. Not in 22. In 22 we are looking at a much worse scenario, but even in 23 we are going to see a recession, a likely global recession. Global inflation is at all-time high, unprecedented. We've never heard of a 7.4 inflation, global average inflation, okay, in 2022. 23, all the response of central banks is going to result in bad news. That is, growth is going to come off. I don't want to keep dwelling on only the bad news. Globally, things are very bad. No two ways about it. We cannot even pretend कि हाँ सब अच्छा चल रहा है. कुछ अच्छा नहीं चल रहा है global economy में. Things are bad. What we have to do is look at inward current strengths that India currently has, and to which I have a very good slide. So, हमने protectionism देखी है post-COVID, correct? We have seen. Protectionism started, by the way, in the Trump era. Trump started to create a lot of trade barriers towards China. If you remember, in 2017, Donald Trump created a lot of trade barriers for China. So the protectionism started then, started by US. As a result, culminate hote from COVID to war, the global trade is going to be very subdued. Actually, there has been a downward forecast by the World Bank and the IMF. Revised kiya hai, the growth will be only 4% in 22 of global trade, and in 23 it is going to be 3.1. And mind you, this may get even worse given the kind of interest rate shocks that the advanced economies are looking. So we have to be prepared that global trade is going to be. After COVID, after the first COVID wave, manufacturing was normal. The factories were running, etc., etc. Services were the last to become normal because they were contact intensive. So we saw airlines open up much later, hotels open up much later. So the contact intense industry was last to join, and that is why we see a lingering lagged impact of the performance of that particular segment, which we have marked in red as the last to join. India always is a consumption story. We need to see retail and urban consumption grow in tandem. Currently, we are seeing urban consumption growing. We are not seeing as much of rural consumption growing. Why is it so? Because we've seen food inflation go up. Rural household में food is the biggest basket of consumption. अगर food inflation ऊपर गया है, तो what happens? Your disposable income becomes low to spend on other discretionary items, and therefore rural demand has been relatively weak compared to urban demand. But what we see is going forward with the monsoon having done broadly better, with the vaccination coverage having done very well in its progress over the last couple of quarters, we will see rural demand also picking up. Also will be aided by the Manrega, which has been very high in this year. I'll skip this. You can have a look at these slides later at leisure. It's more on consumption story because I thought I'll focus on consumption because that's India's predominant driver for growth. But less to say that consumption is recovering and recovering well. If you look at 2 quarters or 3 quarters later, we will see rural consumption also picking up. This is, you can go to this table at leisure. We will see festive demand. This October to March is the time we will see festive demand support growth. Okay, and the Manrega that I was talking about is July May Manrega has been less. Now Manrega is less का interpretation क्या होता है? Is the private sector employment opportunities getting better in rural economy? The non-government support to employment is getting better in the economy. That is why Manrega is lower in July and August. Some part of it can be explained that rural workers went to fields to work, but not all, because the same thing should have happened in last July also. But if you look at last July to this July, Manrega employment is low because the non-government employment is appearing to look better, and that is why we are also presuming that Euro mein, we've seen bloodbath in, yen. USD yen is at 144 levels, never heard of, okay? The tolerance of USD yen was somewhere around 132, and today we are seeing it at 144. For a net exporting economy like Japan, it's a bad news. Okay, then as I said, I've explained a lot. What is this? You can go through these slides at leisure. It's a combination of both demand supply, which is reflected by the current account deficit, which is trade deficit and services exports मिला के जो negative balance होता है उसको हम current account deficit कहते हैं. Our own forecast is India will be short by $130 billion on. Our current account is going to see a deficit of 130 billion. I'll take just 2 minutes. Just 2 minutes. I hope it's okay. Shall I just wind up the conclusions? Yeah. So basically what we are trying to say is, if I can take you through a lot of our calls, is India has to grapple with global uncertainty, but despite which we are looking at a growth. Here we have written 7% growth, which is not a bad deal, but after Fed's policy decision day before, our two or three of our calls are going to undergo a revision. One is growth. We may not see a 7%, but we'll see somewhere between 6.5% to 7% growth. Rupee has already breached our target of 81. We could see further weakness in rupee, but Reserve Bank of India is there as a night watchman, not a night watchman, as a watchman. RBI will not allow runaway weakness of rupee. RBI will intervene through putting forex reserves into deployment to defend the rupee. How much it can defend, you cannot say, because it's a situation not under our control. So it should not be that RBI is wasting the precious forex reserves in selling dollars and artificially keeping the rupee slightly better at a high level. So we do see rupee depreciation. It from 81. Currently it has before coming to the days, I saw it is around 80 or 80.79. RBI will continue to sell dollars to calm the rupee sentiment, but let's face it, rupee is on a weakening bias. So don't be surprised if rupee goes to 82 or 83 levels also over the next few quarters, not today, tomorrow, over the next few quarters. Be prepared for it. Interest rates are set to rise because we will see RBI raise rates. Our initial call day before's Fed call was 50 basis points additional interest rate hike, but now we may see RBI take it up by 50 to 100 basis points better. And if you look at this chart, it is India is going to be fourth best economy in the size of GDP by 2027. As I said, policy certainty is far better than globe. We have had in the past these very seminal, important reforms like bankruptcy code, inflation targeting, GST, etc. And you have a plethora of reforms through PLI, logistics policy, national infrastructure pipeline and the works. Execution is the key. If we get all this through, despite global shocks, India can still aspire to grow by about 7% on an average over the next few years. And on this positive note, I shall end my very long talk. Thank you.
Thank you so much, Dr. Shubhda M. Rao, for those wonderful inputs on growth and economy.
Everyone, and thanks to Dr. Rao for a very illuminating talk. I had a couple of key takeaways which are very selfishly relevant to my business. One is that term loan for expansion, and I'll cover how we are seeing that, and so we are seeing green shoots of that. We are seeing banks eager. This is probably, I have spent about 15 years in this industry. This is probably the hungriest that I have seen all banks, every single bank, to disburse and to chase after good performing companies. And what are banks looking for? And Mr. Joshi covered some of this. Essentially, what banks are looking for in banks, and this has been our experience. The first thing that they will look for is: are you reporting for on time? Is your data in order? Is your vendor payment on track? Are you able to manage your business in an organized manner, right? In a structured, well-planned manner. Whether you are growing, and of course everybody is chasing growth, but whether you are growing would be secondary, and a second and third order problem. But the first order problem would be to try and address whether the business itself is being run in a manner that gives confidence to a counterparty to transact with you on financial terms. One of the key things that I can focus on, and I'll jump into my presentation very quickly, is the fact that over the last 5 years, and this is why I'm probably a bit more bullish than Dr. Rao, but over the last 5 years, and again, purely from a business practitioner perspective, it's my job to do this. Over the last 5 years, the democratization of data and the penetration of technology, right? Especially pandemic years have been very, very useful in taking technology to the last mile. Today we see, mobile technology offers, and it's very, very well documented, the penetration of mobile technology. But the penetration of digital technology in the pandemic period has been extremely useful. And alongside that, and the government has taken some very, very important steps in also democratizing data. A combination of this, a combination of growth, a combination of data technology, we feel is going to make the business of growth for a company easier. And that's the entire thesis of our business. Right? We are in this to help manufacturers and to help organizations and corporates achieve their growth targets by making available to them financial products faster, at a better price, and the best suited financial product than was possible, let's say 5 years back. So I'll quickly introduce my platform and then talk about, yeah, of course, please.
Just so that we can
yeah. So I'll quickly introduce my platform. My colleague Shagun and I both represent this company, UB. We have built a two-sided marketplace for borrowers and lenders. Our borrowers are enterprises and corporates. We are not in the retail space. We are not. Our individuals constitute very, very negligible. There are no individuals on our platform. There are SMEs. There are large corporates. There are fintech companies. There are new age startup companies. But they are all business houses, right? And that is the one key differentiator between us and a lot of other fintech solutions in the market. We are the first fintech solution to focus exclusively on the need of corporate houses in their growth. We have about 3,000 plus borrowers. We have about 750 investors. Now, the very obvious question is, are there 750 plus investors in India giving debt? Because the number of banks is less, right? So we have all of the banks that are there. We have about 60 banks domestic in terms of public sector, private sector, small finance bank and foreign bank, MNC banks on our platform. We have a lot of non-bank finance companies. And we have a lot of HNI investors who also invest in the papers that our large corporates issue. We are able to facilitate debt to the companies in the form of the most traditional vanilla instruments, and I'll talk about that, loans, right? We are able to give them more sophisticated supply chain finance solutions, which is able to make their balance sheet more efficient, and that is something that my colleague Shagun will talk about. But we are also present in very, very highly complex products, like which is where we target the HNI investors in the nature of quasi-capital market instruments like bonds and securitized paper. And we'll talk less about that, but yes, that's a product that our platform offers as well. The core of our service is described on the right over here, which is discovery, execution, and fulfillment. What that essentially means is that if you are a borrower, if you are coming onto my platform, you represent a certain risk to the bank, right? Which is at times codified in the form of the credit rating that you have. And pretty much every promoter or CFO I will talk to will tell me that the rating agency has not fully understood my business. But that is the publicly acceptable benchmark that's there. We use that benchmark and we use data about your business to try and build a risk profile of our own on the platform. On the other side, we have profiles of risk appetites of different banks, right? So how conservative is an HDFC bank and how aggressive, or how aggressive is an HDFC bank and how conservative is a State Bank of India, or vice versa. And these are the two largest banks, right? But you go lower down the curve, which bank is eager to operate in which geography, for which product, for which sector, right? And that is the depth of analysis that we are doing. And then we try to match it. So we match your risk profile with the risk appetite profile using technology. And the building of the profile is also using technology by gathering publicly available data, etc., along with private data. So, for example, we will use your GST data with your consent. We will use your GST data to understand how your business is growing with your consent. But that is in a very small crux what we are doing on the discovery side. The next stage of your interaction with the bank is about, anyway it takes about 3 months to 6 months where a bank is working on a proposal note. We are trying to bring that process down from, 90 days to 180 days that it takes on average. We're trying to bring that down to about 3 to 4 weeks. And as you go along, I'll talk more about that as well. So that you don't need to, if Dr. Rao is right, and there is a need for incurring capex 6 months down the line, you shouldn't really have to plan for that financing from now. Or rather, if you see the market for capex to improve, you should be able to get the financing for it in a month's time and launch the project, right? At the very least, financing should not be the bottleneck in you planning your expansion. आपको 6 महिन्यापासून आपल्यापासून planning करायची गरज पडायला नाही पाहिजे. That is a fundamental thesis that we are trying to operate by using technology and reducing the execution period. And the last is fulfillment. How do I manage banking compliance on an ongoing basis? And it's a nightmare for the largest organizations. I have worked with, sir is here from Tata Teleservices. I was on a call with one of the senior treasury managers of Tata Power some time back. And he said, the number of people I have employed just to manage all my lenders can be a company in itself. And a lot of that is easily automatable work. A lot of that is easily digitizable work, and that is something that we have undertaken, and that's a service that we are launching, and both for banks as well as corporates, and hopefully it will be launched by December. To be able to manage your liability and your treasury instead of hiring a high-powered, team to be able to do so, having everything at your fingertips. So that's the crux of what we do. We have till date facilitated more than 1 lakh crore of debt and continue to grow at 10 to 15,000 crores every quarter. I'm going to spend very little time on this, but just a quick slide on why is optimal debt capital important for mid-sized enterprises especially. And it was spoken about the PLI scheme, etc., etc. A lot of the feedback that we get is that, a lot of these schemes are good for the very large-sized corporates of the world, but what is it in it for me, for a company which is 100, 200, 300 crores in turnover, has done the hard yards of establishing its business over the last 10 years, 15 years, and now wants to get to the next phase of growth. Very, very simply put, debt or any kind of funding is required for steady running of business. You will need working capital. You will need your, retain your profits, and essentially debt becomes a much cheaper source of raising funds than equity at any point in time. Aside from control, it's just the return that equity investors expect are astronomical. And of course, the interest saving, etc., is beneficial from a tax perspective also, interest reduction. From our perspective, debt is inevitable in fueling the growth of the company, in steady running of the company. It is, India has one of the statistics that I'm sure Dr. Rao will agree with me. India has, among the large economies of the world, the lowest debt to GDP ratio, which is at roughly around 60 to 62% right now, whereas an economy like the US would probably be about twice that much, from 118 to 120%, which again goes to show that we are extremely under-levered. And that's the opportunity that we have as well. Now, what are the challenges that mid-sized companies face in raising debt? Please correct me if any of these don't resonate to you, but this is essentially the feedback that we receive from the companies that access our platform. One is outreach is limited, right? You have in your personal networks maybe 3, 4, 5 bankers that you know. You will inevitably want to go to them first, right? But they will limit. Your opinion will get colored by what they tell you. And they have their own self-interest, and the interest of their organization is what they tell you, right? So there is limited access. due to location constraints, due to availability of those banks in your location, due to your ability to reach them. There is a high turnaround time that I spoke of. In our experience, when we started this platform, it used to take a capex proposal in a public sector bank, or actually even in a private sector bank, anywhere between 3 to 6 months. Right? And even working capital proposals were taking that long. Right? There is a high degree of compliance that you have to deal with, managing lenders, their reporting requirements, etc. The paperwork is extremely lengthy. And at the end of the day, the biggest challenge is that you don't know, right? You don't know what a lender is thinking. Over the last 3 weeks, I have faced so many calls from borrowers. यार मेरे को पहला टर्म शीट तो 6% पे आया था, अभी 8.5 कैसे? You know, when the RBI is increasing rates by 100 basis points, you don't know why the lender is increasing by 200 basis points. You know, and even that, you don't know whether he will increase by another 200 basis points of 3 months later or not. You don't know what the lender is thinking, and there is a lack of transparency in the entire operation. And believe me, when I talk to lenders, they will say the same thing, right? A lot of lenders will say the same thing about, यार मेरे को पता नहीं ये कंपनी कैसे grow करेगी, how do I predict? You know, so there is in general a lack of overall information, parity in the system. Banks are large organizations. A lot of times, the left hand doesn't know what the right hand is doing. And it just makes the process very, very cumbersome for you. Now, how does technology intervention, and I spoke about this, and this is the crux of our business model, how does a technology intervention help in, erasing these challenges or addressing these challenges? One is hassle-free and paperless. You need limited manual intervention, and my colleague Shagun will talk about how, paperless, supply chain financing can really take your bandwidth, release your bandwidth and let you focus on your growth. Through technology and the democratization of data, you can eliminate information asymmetry. There is a digital process, there is a digitization process. The general consensus of a lot of people is that, we are as Indians perhaps at times overly sensitive about data and privacy. Generally एक perception है कि अगर मैं market में मेरा paper चला गया तो लोग मेरे बारे में बुरा सोचेंगे, right? If there is news in the market that I'm out to raise debt, यार इसमें कुछ खराब है क्या इस कंपनी में, ये market में इतना टाइम से घूम क्यों रहा है? Now our view is that this is an antiquated view to take. If you are there, if you are transparent, you will not need to be in the market for very long. आप डेटा पूरा डाल दो, आपको जल्दी से मिल जाएगा, आगे बढ़ो. It's the worst thing to spend time on is to raise debt for your company. You have more important things to do. Single click therefore enables infinite reach, that digital technology enables. And the most interesting bit, and this is where we are deploying a lot of our efforts on both using both artificial intelligence and machine learning, is to try and bring about a technology-enabled recommendation system that guides you on which financial product to use at which stage in your life cycle. Sir said about bank guarantee, मेरा margin रह जाता 12 महीने से. What Shagun described. If you want to issue the next, if you want to get into the next contract, you should be aware. You should have that information कि यार ये मैं कैसे इसको कौन से बैंक के साथ negotiate करूँ, कौन से बैंक का example दूँ. If I need to add a new bank, I need to add a new bank. Chandrakant sir spoke about a large crores of companies which are not having, lines of debt, right? I'll give you करोड़ों की बात नहीं करते. There are only 10,000 companies every year which add a new bank. Only 10,000 companies. Last 5 years average is that. So there is a lot of taboo on adding a new bank. That taboo has been built by banks. एक बार वो आ जाता है वो बोलता है नहीं सर आप मार्केट में मत जाओ. It's a very, very simple example, very, very simple funda. The minute you create competition for your banker, you will get the best product, right? Now, what we are saying is that we'll create that competition for you on our platform. The turnaround time, the net solution is that the net offering that we are looking to offer and what borrowers on our platform hopefully are experiencing day in and day out is that the turnaround time is shorter. It is the shortest TAT to raise new debt. The best pricing is available. I will not say the lowest pricing, but the best pricing is available in the market that suits your risk profile, right? And that's something that you need to be aware of as entrepreneurs also. And the product itself is also optimized. Right? So you have the best product solution also, which is propelling your balance sheet. So that's what we do. The two platforms that we will talk about, one is loans, which focuses on balance sheet after working capital, your term loan for capex, if you need promoter level something, structured financing. That's what we do. UB Flow, which Shagun represents, will talk about your supply chain, your trade financing, and factoring and dynamic discounting and so on and so forth. I've spoken about this, I won't spend more time on this, but essentially our effort is to ensure seamless discovery, allowing for seamless evaluation and execution of that process, and lastly managing your lenders post them coming onto your balance sheet. Some of the folks that we have worked with, some of the mid-sized companies, some of the large-sized companies. Aside from this, there is, as I said, more than 300,000 companies on our platform. We've had, some of our companies benefit from the access to large lenders, a hassle-free process, and a quick turnaround time, and some testimonials there as well. At the core of what we do is client experience. If the client, because a very, very simple question that comes to me, yaar, mere paas to ek finance manager hai, ya CFO hai, highly competent, I pay them a lot of money, and why should I then use your platform? Very simply put, it's the convenience factor of it and the reach factor of it. You'll have highly competent people, but should they really be wasting time in ensuring that 15 banks are looking at your proposal to give you the best pricing and the best product that's available, right? So that's the experience. You get a one-click, a one-click publishing of profile on our platform, and then you are able to sort of generate demand for your proposal, for your requirement, as well as then interact with that banker and understand what their process is as the process moves forward. One of our success stories, second largest float glass manufacturer in the country, based out of Delhi. This company had, a legacy issue. They were in CDR some 5-6 years prior to us meeting them. Because of which banks, and they had a bouquet of about 5 or 6 banks on their balance sheet, but because of the legacy issue, the banks were not reducing their rates. So at a time when their peers were borrowing at 6 and 7%, this company was stuck with about 10% plus interest rates on their balance sheet. Through our platform, they were able to, in a matter of, I think, 3 to 4 weeks, we were able to get them term sheet and conclude the transaction in 2 months end to end. We got them 8 term sheets for their 400 crore requirement. We got them 8 term sheets aggregating to 1,000 crore plus. We had 17 investors, which we then filtered down to 8. Right? We brought their cost of debt down by about 350 basis points. And concluded this 430 crore transaction in a period of 2 months back. I'll now invite my colleague Shagun to talk us through the UB Flow, which is a supply chain platform, and we'll both be keen to take your questions, if there are any after that session as well. Shagun.
Good afternoon to all of you. It is a pleasure being here and presenting our take on what we are doing at UB on supply chain finance. While I've been interacting with some of you and I've listened to some of the questions which have come out, what I'm going to present would more or less resonate with you as to what is happening, because most of your small companies who are having some larger counterparties either on wherever you're supplying from or probably you're buying from. So this will help you resonate as to what kind of solutions we are providing and how it will help you get capital and expand your business as well. So we started UB Flow around 24 months back, specifically to cater to the needs of the vendors and the customers, dealers or distributors of large corporates who are there on our platform. We have now expanded the offerings, but essentially what we are trying to do here is we are trying to help the supply chain ecosystem, Okay, the tier 1 ecosystem, which is the tier 1 suppliers to large companies and the tier 1 buyers from large companies and mid corporates as well to avail finance. There are multiple solutions and multiple structures which are available. This is what we are doing currently. This is where we are in terms of the number of corporates on our platform, the number of investors. So we have more than 100 anchor corporates who are registered on our platform. More than 50 of them are transacting business with us. We have almost disbursed 3,000 crores of money over the last 24 months. We have approximately, now we have around 1,000 dealers and vendors of these large corporates on our platform. Now we are covering all kinds of companies, unrated companies to AAA rated companies as well on our platform, and we cover almost all the sectors because we are a marketplace. We have all lenders on our platform, so we are agnostic to any kind of sectors or any kind of companies coming on the platform. So this is what we do on what we have done on the anchor side, the corporate side of the platform. On the investor side, we have now currently 20 plus investors, approximately 25-30 banks and NBFCs have signed up. 20 plus investors are live and transacting on our platform, which is where they give out money to the vendors and dealers through our platform. Now what we are doing is we are essentially offering two products, which is vendor finance, that is the supplier finance or suppliers that supply to mid corporates and large companies, and dealer distributor finance or buyer finance, where dealers, distributors and buyers are buying directly from large companies. So these are essentially the two products we are doing currently. We are now expanding our scope of offerings to go into tier 2 market as well and to tier 2, tier 3 cities as well. So what are the benefits which are happening through our platform? One is, we try and enable these programs to happen in a very quick time. The end-to-end journey is completely digital. So all vendor onboarding, supplier onboarding, customer onboarding is all digital. We are essentially trying both sides of the supply chain ecosystem, the upstream and downstream, where we can enable flow of money. We help in various strategies in terms of top line improvement, bottom line improvement, deleveraging, etc. So as a combination of a product and structures, this is what we offer to our corporates or who are there on our platform. Now, why are we being so successful? What happens is when you talk to your lenders, you have only one-to-one conversation with your lenders. So what happens for any company when they talk to one lender? Only 10 to 15% of the supply chain ecosystem gets financed. But once you come to our platform, we should realize that the entire vendor ecosystem or the entire customer ecosystem of any corporate is not homogeneous. So the small vendors, the large vendors, the small customers, large customers, and they belong to a different set of industries also, right? Somebody is in packaging, somebody is in raw material supply, somebody is in service. So different kinds of vendors are there, different industries they belong to, and different sizes also there. Now, if you cannot have a homogeneous or a single solution for all kinds of vendors and customers, what we do is we try to enable capital at different price points and different industries and different sizes of the vendors and customers through a platform. This is where we succeed. Traditional vendor finance and dealer finance programs see a take rate of only 15 to 20% of the ecosystem of the corporates being financed. Here, once you come to UPFlow, the take rate is actually much better than what it was by talking to only one or two lenders, because here you're talking to multiple lenders on the platform. Now, in terms of what we are trying to do is, this is more from an anchor or a corporate point of view, but it will benefit even the suppliers at large. So what happens when we enable a vendor finance program is, we help corporates with strategic sourcing, we help corporates with a DPO extension, which ways they're doing, right? They're not paying you guys on time. So we formalize this process so that everybody is aware that the money to the vendor has to go out in a certain period of time. This enables a flow of capital. Otherwise, there's no flow of money which is coming. Banks will not discount bills and give, because if there's no confirmation from the anchor corporate as to when he is going to pay. But once he comes into this program, this gets formalized to a certain extent that even if it is a delayed payment, but a date gets finalized under these programs. Then obviously deleveraging also happens, and then margin expansion also happens. This means, what margin expansion essentially means is, there is capital which is stuck. If you can get capital upfront at a certain cost, it will help you to increase your business, and in fact it will help you to increase your margins as well. Now, what do you mean by strategic sourcing? It's as simple as strategic sourcing is, there are suppliers who will work with companies only if they are offering good payment terms. Now, If a supplier is getting payment on day one, obviously he becomes, he gives the best of the product and the best of the price also to the corporate. And the corporate also has a special relationship with the suppliers, because this special relationship ensures that the flow of goods and materials is on a continuous basis and not got stuck for any other reasons. So capital is one thing where a lot of discussions happen between the vendors and the corporates, which we want to do away with by bringing it under the financing route. So the suppliers would love to work with you guys if actually, what I've been hearing is 10 to 20% of money gets completely stuck, it comes later, and that has to be somewhere or the other built into the cost, right? And your cost of borrowing obviously is less, and if you can enable a lower cost of borrowing for that money, nothing like it, you get your money upfront as well. Now, how do typically vendor finance programs work is, for a large corporate, he will never pay on time. This we all know, and even the trades which is there, it is not taken off to the extent what we want them to take off. So there have to be incentives which have to be built in for the corporates to pay upfront. You cannot force corporates, large companies to pay you guys on time. This will never happen. It has never happened. Even trades also, when the government has said that companies above 500 crores need to come on the platform, out of the thousands of companies, only 200, 300 companies are transacting on all the three trades platforms. That is the actual data which I am telling you. Only 200, 300 companies are regularly transacting. So what that means is companies, they have to be incentivized to make payments to the vendors, early payments to the vendors. One of the way to incentivize a lot of companies is to help them deleverage the balance sheet. You guys are anyways, the small vendors are anyways borrowing from different sources, from banks, from the market as well. If you can formalize this arrangement and do a vendor finance program which removes certain debt from the balance sheet of companies, obviously they will be incentivized to get into these programs. And vendors, as you guys are, the smaller companies will definitely get a cheaper source of money, because we are giving money based on the rating of the large corporate who has signed up for the program. Otherwise, what will happen is you will end up raising money at a much higher rate of interest. Here, money gets raised at the rating which the corporate is having, so which will be much more higher than what a smaller entity has. So similarly, this is the other method. What we talk about is the days payable extension, which I told you is, the corporates anyways pay late, so why don't you formalize this arrangement? We help formalize this arrangement that, okay, you pay late, but we fix a date, that this is the date when the money will come in, and then we discount that bill and give the money to the vendors early. So what happens is vendors get to know that, they're getting a committed line of credit, they're getting the money when they want, they're getting an unsecured line of credit, and then they know exactly when the money is coming, so that they can build it in their cost when they negotiate with the companies the next time around. So this actually helps the smaller vendors and the mid-sized vendors to plan their financials better. Now, margin expansion is something which I just told you is, which will help you to improve margin and also help you to unlock capital. The essential point here is you get the money up front by giving a cash discount to the anchor corporates. Now, if you give a discount to the corporates, that's when he will want to come and start working with you. So there has to be an incentive built in, like I said earlier, right? So these three models are where we try to get an incentive built in both for the vendors and the anchor corporates, wherein both of them get interested to come and start working under a vendor finance program. The end result is you get the money upfront, you get the money at a lower cost of capital than you would have got anywhere else, and you get money based on the strength of the anchor corporate. So this is how the vendor financing scheme works across our platform also, and how it is working in the industry as well. What we do is we increase the sales by giving additional credit to the dealers and distributors. We help reduce the DSO for companies as well, because if they get money upfront, their days sales outstanding reduces. We eliminate the credit risk and help companies deleverage the balance sheet. We also are now getting into a mode where a lot of companies are now moving into a B2B marketplace. Now they're selling online. So instead of selling to the traditional ones, now we're coming up with a product where somebody who buys online from a company, he can avail of finance while buying itself. Like what we do on Amazon and Flipkart as retail. When we buy a telephone or we buy any consumer durable product, we have an option for financing either through credit cards or through any other mode. Similarly, for a B2B business also, we are trying to build this product. Now, how is it helping to increase sales by using this product? What is happening is the dealers are all, as I said earlier, there are different risk profiles, small, big, they're in tier 2, tier 3 cities, somebody's in tier 1. and somebody does many other businesses, some dealers do only this particular business of the company. So we provide capital to all of them because we have around 20-25 lenders. Now our marketplace will help discover and align lenders based on the risk profile of the dealers and distributors. Now what happens is once we give money out to the dealers and distributors, this will help everybody in the ecosystem because the margin that the dealers and distributors make is always higher than the capital which we provide. We tend to be higher than the capital which we provide to them through the platform. So if the return on equity of a dealer is around 18% and if we provide capital at around 12%, obviously he'll make that 6% additional money and he can increase his business also because he gets an additional line of credit as well. Our whole idea is to provide an unsecured line of credit through our platform. This is how the business is also running on the tier 1 supply chain finance. So please understand that what we provide is an unsecured line of credit, a committed line of credit, a lower cost of funds, which is otherwise unavailable. So this chart I will leave it, we'll share the presentation with all you guys. This is a similar chart as to what we showed on the vendor side. This is on the dealers and distributors side. And similarly, we help companies deleverage both on the vendor side and on the dealer side by moving the financing to the vendors and dealers, which will in effect anyways help the vendors and dealers source larger amount of capital from the lenders. Now, how does it work at our marketplace? A corporate can come, register on our marketplace, then he creates a program, he completes a profile. What will happen is, as shown in the loans platform, we get a lot of interest from lenders. You accept the interest from lenders, you can negotiate your terms and conditions. Once the terms and conditions are negotiated, then the program gets set on the platform. Then the company invites its vendors and dealers, and the vendors and dealers sanction is done by the respective lenders, then we go live. So if you're dealing with companies which are there on a regular basis, you can come to us and you can tell us, you can see whether the companies are there on our platform or not. If they're not there, we will have to engage with the companies and enable supply chain finance programs for your business as well.
Meet Mohit from Future Motors, leaders in automobile manufacturing. 4 brand new cars roll out of Future's assembly line every minute, for which Mohit's role as procurement head is critical. Future has a massive supply chain network. Mohit and team have to ensure that the 1,000 plus components that go into Future's cars arrive on time, every time, from their extensive supplier network. Then there is Riaz, the sales head, whose sole focus is to ensure that Future's dealers are buying and selling more. On the other hand, Monica, Future's CFO, has the challenging task of managing working capital requirements of Future Motors and keeping debt levels under control. To optimize working capital, Monica expects a 60 to 120 days credit period from suppliers who need money on day 1. Monica also expects that dealers pay upfront for delivery of Future's cards. This could potentially strain the relationship between Future and its suppliers and dealers. How can Future balance its own working capital needs with the needs of its suppliers and dealers so they work like a well-oiled network? Enter UB Flow, the most flexible and advanced supply chain finance platform for corporates covering various sectors across credit ratings. The platform's guiding principle is that supply chains are heterogeneous and therefore capital needs to be aligned at every risk and price point from multiple financial institutions. UV Flow's dedicated relationship manager helps onboard Future Motors on its platform in a simple and efficient manner. Subsequently, Future creates a vendor finance and dealer finance program on the platform specifying a few parameters. Now UV Flow's AI matchmaking engine gets to work. It ensures that Future's supply chain finance program is visible to the right financial institutions from among its vast pool. Mohit and Monica are spared the effort of chasing multiple financial institutions to find the right partners. They receive competitive proposals with desired terms. They soon find the right partners in Glowbank and others. Future's program now goes live. In just a few days, bulk of Future's suppliers and dealers are on board. platform, which are automatically processed, and in less than 24 hours, they receive their due payments. On the other hand, dealers start placing more orders with Future, and Future gets its sales proceeds on day one. Future Motors, their suppliers and dealers are delighted, as all of them get an injection of working capital in no time and without any hassles. They use closed platforms, automated invoice processing, and customized dashboard with critical data points help Mohit, Riyaz, and Monica strengthen their relationship with suppliers and dealers while freeing up their time to focus on other important matters. Since Future is able to negotiate better interest rates, they pass on some of its benefits to their partners. With UB Flow's supply chain finance solution, Future Motors not only solves its working capital requirements, but also gets many other benefits. It ends up deleveraging its balance sheet, extending days payable outstanding, reducing days sales outstanding, improving its rating, improving its profit margins, increasing sales, and attracting the best suppliers and dealers. UV Flow, cash flow optimized.
And since you said about 4,000 customers already joined, how more customers can be joined and take advantage, because every company is looking for an instant payment, not even instant, but at least weekly payment. Banker is sitting here, so they are also looking for cash flow from the company point of view. So looking at operation advantages and benefits of this platform, what is the major lacking you understand, particularly from the supplier's point of view?
What is happening here is we are not able to get the ecosystem to come on the platform. So they're not aware. Okay, such a solution is available in the market. When we also go and speak to corporates, we sell them the solution, but it doesn't go beyond the corporate. So the corporate has to socialize the solution to its ecosystem, which the corporates are not doing it for obvious reasons. There's it is something which has to be done separately, or something new which they have to do other than what they have been doing for 15-20 years, right? So this is one thing which we feel is that it doesn't get socialized and people don't get to know. Now suppose if your small suppliers or small customers, when you get to know that such solutions are available in the market, then you automatically will come, the demand is generated on the platform, you come to the platform, and then you also start questioning your counterparties, large counterparties, that such solutions are available in the market, why are we not getting it? So awareness is the biggest thing which I believe is there. We are now trying to create awareness in this respect in terms of doing a lot of marketing. We are doing targeted approach by reaching out to industry associations like we are doing today, this session we are doing. So this is what we are trying to educate, that such solutions are available in the market. If they are not available coming to you, then you have to demand them from your counterparties, right? Larger counterparties which are there. And many of them are still running it, but you don't get to know about it. So this is one thing which I believe, which will help increase the velocity of capital moving to small enterprises.
That's right. And another point is, particularly awareness. See, usually I will suggest you, particularly on the point of the buyer, suppliers point of view. If suppliers is registered with you, see, you are looking at the buyer's point of view. I will suggest a different way. We will encourage suppliers to also register on your platform, because they are also buyers. If I am buying from XYZ company, and the suppliers, those are registered, they will say, I am a member of UB, you can use the platform of UB. I prefer my supply chain payment from the UB.
Yes, so that is what we are also now preferring, because the first instance we did reach out to large companies or the buyers, it was not moving that fast because they were not incentivized. But now we started reaching to MSMEs, etc., who are having relationship with large companies. So there the movement has been faster, because we get to know that we have a supplier base And then we go and tell the corporates along with a few suppliers that, we'll do a program and why don't you start? There it starts then.
See, you had given one small plant. So let us, grow this plant as a big tree, the fruits. So I will suggest you, we will take up as a SME Chamber of India, because most of the affected sector in India is SME sector.
Absolutely.
So what we can do, reverse mechanism, we will encourage SME members that you inform your buyer or large corporate. I am a member of UB, a member of SME Chamber of India and Maharashtra Industrial Development Association. We want to use this platform. So that automatically 4,000 it will convert into 40,000.
Correct.
Yes, any question from the audience?
What is the difference between this Credex and UB? Credex and UB.
So two key differences, and you can add one. One is, of course, that Credex is limited in the product offering. They are only, restricting to some trades that you are on our platform. You can access. When I'm saying product offering, I also mean investors. Right? They're targeting one particular type of investor with one particular product. You can access any type of product with any type of investor on our platform. That's one. Secondly, every trade that you do on Credex, since it goes out to only HNI investors, there is lesser certainty of conversion, right? Or the rates being from one transaction to the next transaction, the rates differ. Since UB Flow takes a program-based approach, you can get a certainty of the interest rate, you can get a certainty of the financing, you can get a certainty of the time of the financing. Everything gets pre-decided and concluded and move on faster.
So I had mentioned in my presentation also, you get a committed line of credit, you get an unsecured line of credit, and you get a fixed rate of interest. Okay, it's normally fixed for the entire year. And you know who your lender is also in this case. But in Credex, you don't even know who the lender is. There are retail borrowers, HNI, retail lenders, there are HNI lenders who are lending money. The rate of interest varies from time to time also. And sometimes you won't get capital also. That also happens in many cases. So that's how we are placed differently.
Hi Aniket and Shagun. Thanks for the enlightening presentation on UB. This is Vinayak. I'm founder of Bolt Cargo. What I see in your slides was few numbers mentioned. 1 lakh crore offered by 750 investors and around 3,000 borrowers, which puts the number to around 33 crores average borrowing per borrower, which looks very high. Or the interest rate might be very, very enticing. So can you throw some light on that?
The average transaction level. So from a transaction size perspective and interest, I'll address both of them. From a transaction size perspective, the smallest that we are going is 25 to 30 lakhs. The highest, I gave the example of 430 crores. So there is highest that we have done 500 crores, 600 crores also. Single transaction, single borrower. Average comes between 30 to 40 crores, as you rightly said. The second is in terms of rate of interest. Depending on the product, an unsecured product will have a slightly higher rate of interest. Within that product, you may still find the most competitive, right? So if you and your peers are getting unsecured money today at a range of 12 to 14%, just as an example, on our platform, you are likely to go to the lower end of that spread for that product, right? But yes, across products, so last 2 years have been good from an interest rate perspective. So we have had companies raise money. I gave the example of Nova Dairy. We raised money for them at 4%, right? It's one of the large private dairies in the country. Very large company, more than 2,000 crores turnover 2 years back. So we raised money for them at 4%. As ma'am also said, rates are rising. So 4% I don't think is a reality anymore. But yes, whatever the competitive rate is at that point in time, we should be able to provide that.
So UB is a platform where you can register freely. Free registration is there, no charges, and you will also encourage your suppliers to also take advantage. And this will be a good opportunity for your supplier to get, instant. Yes, please.
Are you also funding the hospitals of the healthcare sector where the money is due from, say, insurance company and stuff.
Yeah. So, I don't know, ESI receivables, we found it difficult to find buyers for that. But,
we're not finding lenders do business there easily. You know?
Because that's a very genuine problem that the hospitals face. Where the money gets stuck for 3 to 4 months.
you're right. So, depending on the insurance provider, so like I said, ESI might be a problem, but some of the private insurance companies may, even if that is a 90-day, there will be more, predictability that 90, 100 days ke baad aa jayega. So then you may be able to find financiers for that.
See, always lenders work on predictability when the money is going to come back. So, as I told you earlier in the presentation also, the date of payment, even if they're making late payment, the date of payment gets fixed from the corporate, then though we can do any kind of financing on that, So here the predictability, we don't even know when the money will come, 10 days, 15 days, 20 days late. So that's why lenders find it difficult to underwrite and give money there.
Don't worry, if UB is not doing or any other platform, my association can do for it.
That's a very genuine problem in the healthcare sector right now, because everybody is going for insurance loans and cashless or whatever.
Definitely we can support. See, Dr. Rao has given very unique perspective of the India's economy and particularly global economy. And I kept one important question for you, reserved to ask you, what is Modi economics will take us to the, on the road, as you said, 2027, we can achieve around 7.8 to 8% GDP growth, or we can be a third largest economy in 2027. What will be the perspective or 2024 election point of view, because instead of sitting in a Delhi, she is in running poll and post. So, do you think that without this industry, Mr. Modi will achieve the target, and without UB, the industry will achieve the target, or without your ideas, India's economy will grow?
Thank you, Mr. Saluki. I think you've answered the question yourself, actually. Very important is, the Prime Minister has recognized that India, unfortunately, skipped the manufacturing story as the biggest growth multiplier, and that is what he has been emphasizing way back 3 years ago or 4 years ago when he announced Make in India. And I remember that many of the global investors and think tanks used to come and have a certain sense of disbelief. And I've spoken to plenty of those, multilateral think tanks. They say, oh, how is it going to be possible to have a Make in India kind of a platform? So we said that, okay, we have the biggest asset called labor. We have technological prowess. The entire design is on the basis of technology-driven, cost-efficient growth model. So why not? Make in India is something which is going to maybe take a year or two to take off, but it will be. And true enough, the PLI is introduced. It's not just the idea of having India being looked at as a global manufacturing hub, particularly at a time when China is vacating, either due to compulsion or due to some fatigue. Every economy goes through its fatigue phase. And this is the most opportune time for India to, I keep saying that, seize the day-to-day, carpe diem. And this is where manufacturing sector, and as you said, if finance minister is here, Pune is the one critical manufacturing hub, and that becomes important. And it's not just in isolation that you look at manufacturing. What is good of manufacturing if it does not have enablers, like a national logistics policy? Today, India needs to work harder on improving its logistics. We lose a lot in terms of the cost of logistics. India has something like a 14%, 30 to 14% cost 13 to 14% of GDP as a logistic cost. Globally, it is around 7 to 8%. We have to improve the efficiencies. So the whole design has been that, okay, you just don't dream of manufacturing, but you create Gati Shakti, you create national logistic policy, and ensure that there's a maximum multiplier impact once those PLIs take off in a big way on a broad basis. It's not that one or two are functioning and others are not. I think it's a big program, it's a massive program. So anything has a gestation. If you take another 2 to 3 years, India will definitely have a lot of global centers coming to India to have a preferred destination here as a manufacturing hub. So I would say that if there is a dream, it is for India through manufacturing to catapult it into a fourth or even third largest economy over next 4 to 5 years.
Recently, this logistic policy announced by the Honorable Prime Minister, I'm a little bit doubtful because he is expecting that at least 7 to 10% rate overheads to be reduced. But still we are facing that roads are not good, diesel petrol prices are increasing, skilled manpower is not available in the logistics sector, not even educated the people from a logistic point of view. So how the rate will be decreasing, by the way. And most importantly, the movement of the logistic services is most important. So anyway, thank you for your insight, for the taking us to Pune to global, because I forgot to read the last 3 days US and European newspapers. So I got a lot of inputs from it today. Friends, we are talking about advantage of the UB, advantage of their operations, and we also understand the future of credit. Now, future of credit will not be unlocked, rather possibilities without technology. So we have to understand the technology, and for that purpose, Tata is far ahead, going ahead and giving a lot of inputs for the technological development. So let us understand from him then what kind of technology will unlock possibilities with the advanced technology, particularly to use the credit facility for smooth running business as well as to improve our GDP. Let me present you Rudra Mishra from the Tata Telebusiness Services.
Thank you, sir. Am I audible? Am I audible?
Yes, yes.
Is the mic working or is it my voice that's reaching there?
Voice is not reaching there.
So I don't think so need the mic. So I just thought that I will not touch the mic because I'm sure all of you will be in a very big fatigue, 2.5 hours. I have been given a very tough task, I stand between you and a very tasty, delicious lunch, right? So friends, I'll close it in 20 minutes, if not more, if not less. Yeah. We started the session. We've been having a huge array of discussions. We started with a word called VUCA. Any guesses? I'm sure all our esteemed people here. What is VUCA? Any definition for VUCA? Any takers who can explain VUCA? VUCA.
Volatility, uncertainty, complexity, and ambiguity.
Absolutely bang on, sir. So it is volatility, it is uncertainty, it is complexity, and it is ambiguity. While I was going through all this, I thought that, I'll give a new definition to VUCA. Right? So I'll change what VUCA means and then probably I'll substantiate my claims. VUCA would mean, for me, vision, right? So how do you handle VUCA 1 with what I'm saying? So one is you can handle volatility with vision, right? That is one. How do you handle uncertainty? You can handle uncertainty with understanding, right? So I'm giving you words, word by word, right? How do you handle complexity? How do you handle complexity? C for complexity. You handle complexity with clarity. C for clarity, right? How do you handle ambiguity? Anyone, any guesses? So last A is left. Anyone on that A? None. Any guesses? I thought that I'll make it thoda sa entertaining because the tempo seems to be going down and people are like, if there is no interest, they'll just run away. So I need to hold the crowd. So awareness, yes sir, awareness, that's one good way, yeah. Anyone sir, anyone? Let's make it more engaging. Only, I'll finish in 15 minutes. I don't want to talk much.
Agility.
Absolutely, bang on. So friends and gentlemen, we are in a VUCA world. And I say VUCA 1 is volatility, uncertainty, complexity and ambiguity. And I say VUCA 2 is something that acts as a solution to VUCA 1, which is you have vision, you have understanding, you have clarity and you have agility. Now, we had discussions on, credit, lot of credit, suppliers, dealers, lot of things, right? I would like to just get the focus on why it's good for borrowing credit. How can we improve our own internal mechanisms to optimize our cost well? And how can we do that? So that's point one. There I would like to put a point. I feel if we use technology, whether we are a small size vendor, whether we are MSME, we are SME or a large corporate, whatever it is, if we use technology, we can certainly reduce our expenditures, our costs, increase our profitability, increase both top line and bottom line. Are you people with me on this? Do you agree or disagree? Sir, do we agree on this or we disagree? We agree or we disagree? Sir, agree, right. Anyone else? Any disagreements? Okay. So let's take up few. So this is the point has been agreed. Now let me come to my topic, right? When I say we need to improve profitability, we need to ensure healthy top line, bottom line, we need to reduce expenditure. How does technology come into that? How does technology help anyone? Anyone would like to say something? Yes, sir.
Speed, wider audience, wider platform is.
So yeah, that's what Shagun was saying. We are trying marketing efforts to reach to multiple people. That's another mode of technology, reaching wider audience. Yeah, that's right, sir. That's right. Yeah. Anyone else?
It helps to improve the communication.
It helps to improve the communication, right, sir? That's also a valid point. One more intake, yes, sir.
Cost reduction.
Cost reduction. I totally agree with you on that. So all three points valid. Let me substantiate what I'm saying with the example. And this example is of Pune city itself. Here I am talking about a sector that is not very closely linked to technology. So when I say manufacturing, yes, people understand technology. They want to move to industry 4.0. They know digital factories, they know metaverse, they know so on, all sorts of AI, ML, everything. IT, they are the ones who are creating the technology. They are also very relevant. Now let me tell you one example. Dairy farming is a sector which hardly uses technology, right? There's a dairy in Pune itself. What did they do? During the COVID times, they opted for a very innovative technology solution. What was the solution? I'll let you know. What happened? With the similar set of assets, they were able to increase their production, milk production here, in this case, substantially. I am not quoting a percentage, reason being, it varies, because here it's a physical animal that is involved, but substantially, right? What happened? What was the technology and what are the benefits? COVID times, supply chains were restricted, essential commodities were not available, companies were struggling. Here we have someone who has deployed the technology solution has been able to increase its production substantially, go to the market much more faster, much more easier, and increase on their top line and bottom lines. This was a simple solution, a solution that tracked the nutrients that were giving, the food timing, the water timing to the cattle, to the animal, the kind of fodder, the quantity of fodder, everything was monitored, and this led to a 60 to 70% increase in the milk output. Now, this is how technology is helping. So friends, this is one example which I just thought to share, that how technology can shape your world. Whether you are a big supplier, whether a small supplier, whether MSME, SME, whatever. Now, I would just like to spend 10 minutes talking about the financial sector, right? Because this is the topic. Right. Now, what we perceive from our lens is that the financial services sector, like we've got players like UB, we've got small players, we've got big players, small lenders, big lenders, there are new entrants. What is happening to the new entrants coming? There is an ever-increasing customer expectation. So maybe you will have expectations, someone just said, lending rates. Someone may say, I want a paperless transaction. Someone may say, I want a better contact center. I want feedback. I want to understand what are the rates. How is it varying? I want the papers. I want all those things. So that's one. Second point is that these new business models are evolving. So when I say new business models, what is happening? You've got UB as an innovative business model that has come into the system, right? Otherwise, 15, 20, 30 years back, it was traditional lending, right? आप बैंक में जाते हैं, पैसा लेते हैं, वो आपको बताते हैं आपका इतना होगा, ये होगा, नहीं होगा. You go to that regular person, right? So innovative models are coming, and the workforce is changing, right? So from the traditional modes, the entire workforce is now shifting here. So we are moving from convenience to an omnipresence model. That's what just Chandu said. It's paperless. You come on the platform, you do a transaction, you get to connect with vendors, you get to connect with suppliers, and that's how you come to an omnipresence model, right? Now, who's supporting this omnipresence model? It's host of technology that is supporting this omnipresence model. So any supplier would need to either expand, grow, develop their organization, company, SME, MSME, whatever, on a backbone of technology. So this is what is a short gist. And I would say that today's financial services world is very complex, very complex. You've got digital payments, you've got wallets, you've got P2P, you've got insurance and debt, you've got fintechs, you've got insurtechs, big techs, wealth techs, and omni techs. But you see, there is a suffix in everything that is tech, right? So tech is very important in running anything and everything you do. I would not spend much time here. I would just spend 2 minutes here. What are the challenges? The challenges are clearly that there is a continuous competitive pressure. Growth, profitability, and risk targets. Because the environment is volatile, the credit is unavailable, you don't know how's the customer behaving, there are umpteen factors, war, Shubha manager spoke about, multiple things that are impacting. So then there is certainty, there's a certain amount of risk that is there. Operational and channel efficiencies. We just had this discussion, There's a lot of, Chandrakant sir just mentioned that, there's a lot of inefficiency in logistics, a lot of inefficiency in American operations. So these are a few things that I feel, and overall, the biggest challenge for the BFSIs are the regulation and the compliance part. This is something that they really need to look into. I will skip this also, and I will just spend a moment here. SME financial service providers, or let's say if it is not even a financial service provider, it is an SME. Forget word finance. It could be finance agnostic, it could be something else. This is applicable to all of us. It says that you need to explore, identify your business requirements, whatever you're doing, whether you're selling a raw material, whether you're in packaging, you're in chemicals, you're in construction, you know, whatever you need to understand and assess what your business requirements are. You need to map the process and systems. You need to understand how you can get more technology play into your organization. So let's say a fairly well-sized organization like UBFlow is operating on a multi-technology platform. Lesser workforce, better control, they have got reports, dashboards, data, everything that has been integrated with technology. So they've been able to assess. You need to build a roadmap. What do I need in my organization? Is it a simple lease line connection that I need? Is it something that I need a marketing solution where I connect with my customers better? I need a contact center. I need a service center. I need a simple helpline number. That's it. 1880, 1800, where my customers, my clients, my suppliers, my dealers can connect with me. As simple as that. As simple as that. But that helps big time because you get reports, who called you, when, if someone called you, did your customer service people respond back? Have they said what they've said? So that part needs to be, you need to understand the roadmap and then measure value. Select a technology that helps you. I'm sure in BFSI and ISU, or forget BFSI, anywhere, security is now a very important thing. It's very important that your networks are secured, your data is secured, your IPs are secured. Your money, your cash transactions are secured. Because everything is technology. So do you have a security backup with you? Are you investing in security? So I'm just giving an eye-opener, right? I would not get into the product portfolio. I would not get into the customer testimonials also because I don't want to spend time. There's a lot of it. I would just like to spend a moment here. You know, let's look at, there was a customer who was looking for a secured connectivity. So I'm sure a few of you will be having multi-location operations, right? So you may be operating here within Pune, 2-3 locations, maybe outside Pune. Was looking for a secured connectivity to host their AWS services at the Kurla, Mumbai, and they required a Glamour partner to provide a managed solution. What we did was, we deployed a multi-protocol label solution. It's a technology, don't get to that, but it seamlessly connected all their branches, it interconnected with their CRMs. So they were able to efficiently improve their uptime, their performance. The benefits that they had was, first, it was a private entity because it's a banking organization, it is dealing into financial details, hence data security is very important. The entire intent is that you need to understand for your organization that what kind of technology is required and probably onboard that technology and more so have a technology mindset. Because if you don't deploy technology, eventually someone else will deploy and you will get the benefit. And there are a few fast learners, there are a few quick takers, there are a few slow takers, there are mid people in the mid segment. But then always try to stay ahead of the curve because market is highly competitive. If you are not going and selling to someone, someone else is doing. And then again you are increasing your dependency on the credit part. So the objective is balance your growth expansion plans with efficient credit management and in-house improvement of your top lines. That should be the way. I'll just quickly, close the session by saying that we at Tata have been a trusted partners for SAP because we offer host of technologies under one roof, 47 odd different stuff we offer. I'm not into it. It's a simple plug and play solutions. We offer secured solutions. That's one important thing, and data privacy is guaranteed. So these are a few things, and I would just like to say that we've been awarded by the top industry bodies for the kind of work that we've done. I've put a few, but I'd just like to name a few. One is the ET Telecom Awards. This is a big one, where we understand that this is given to the best telecom service provider. We've got a CII Customer Obsession Award. This is also a big award for us. We've got Innovation and Technology Award. So the objective is that Tata Tele Business Service serves as a one-stop technology partner for all SME technology needs. And with this, I would like to pause and maybe take a few questions if anyone has. Okay, thanks. That's it from my end.
small plant as a token of gratitude for all the delegates. I would request you all to accept it and let us start our journey with UB and let us grow our relation with UB. Now, may I call Mr. Chandrakant Saunke to give the vote of thanks.
First of all, thanks to Aniket ji for giving a very useful and very important presentation. And special thanks to Dr. Rao for enlightening us on the economy as well as future of India. Shagun ji, always you are encouraging for an industry, particularly for the supply chain. And of course, Viren Joshi has given a very valuable suggestion and some of his thoughts for an industry perspective. Friends, let us unlock the our relationship with the UB as well as our chamber and association. So thank you very much for participating. Now let's join for lunch. And thanks to UB for organizing this today's program for your benefit purpose. And I request all of you to take advantage of UB services so that your suppliers will be very happy. Thank you. All the best.